Imagine having the confidence to pick winning stocks, knowing that every move you make is backed by solid research, not just a lucky guess. Sounds good, right? Well, that's exactly what we're diving into today. In this video, I'm going to show you how to research stocks like a pro, so you can invest smarter, minimize your risks, and take control of your financial future. Stick with me, because by the end of this video, you'll have the tools and knowledge to pick stocks with confidence. Ready to learn the secrets of successful investing? Let's get started. Let's start with the most important question. Why is researching stocks so crucial? Investing in stocks without doing your homework is like playing the lottery. You might get lucky, but chances are you'll lose money. Proper stock research helps you make educated decisions rather than relying on luck or market trends. It gives you the confidence to invest in companies you believe in and helps you avoid risky, overhyped stocks. When you research a stock thoroughly, you're not just buying a ticker symbol, you're buying a piece of a business. So, it's important to know what that business is worth, how it operates, and where it's headed. Good research reduces your risk, increases your potential for returns, and helps you sleep better at night, knowing your investments are based on solid data. The first step in stock research is understanding the company behind the stock. After all, buying a stock means buying a piece of that company. Here's what you need to investigate. First, start by learning what the company does. What products or services do they offer? What industry are they in? Who are their main competitors? You should have a clear picture of how the company makes money and where it fits within its industry. Visit the company's website, read its mission statement, and familiarize yourself with its leadership team. Next, check the company's recent revenue reports. Are they consistently growing, or is revenue declining? Consistent revenue growth is a good sign that the company is performing well and has the potential for future success. And finally, does the company have something that makes it stand out from the competition? This could be a strong brand, patented technology, or cost advantages. Warren Buffett refers to this as a moat, which protects the company from competitors. Look for companies with a unique edge that makes them hard to beat. Next, we dive into the company's financial health. This part is key for determining whether the company is a safe bet for your investment. Let's break it down. First, earnings per share tells you how much profit the company makes per share of stock. Look for companies with a steady or growing EPS, which indicates profitability. If EPS is shrinking, that's a red flag. Then, the PE ratio compares a company's current share price to its earnings per share. A high PE ratio might indicate that the stock is overvalued, while a low PE ratio could suggest it's undervalued. However, don't rely solely on this number. Compare the PE ratio to other companies in the same industry for better insight. Next, check the company's debt levels by looking at its debt-to-equity ratio. Companies with high levels of debt can struggle during tough economic times, while low debt means the company is better positioned to weather financial storms. A manageable debt load is key for long-term success. And finally, cash flow is the money that flows in and out of a company. Positive cash flow means the company has enough money to cover its expenses, invest in growth, and reward shareholders. Negative cash flow, on the other hand, could signal trouble ahead. Stock research doesn't stop at the company level. You also need to look at industry and market trends. Understanding the broader context will help you figure out if a company is positioned to succeed or if it's vulnerable to outside pressures. Is the company in a growing or declining industry? For example, the tech sector has been on a growth trajectory for years, while some traditional industries, like retail, have faced challenges. Look for companies in industries with long-term growth potential. The overall stock market can impact individual stocks. Are we in a bull market, which is rising, or a bear market, which is declining? Economic factors like interest rates, inflation, and consumer confidence can affect stock prices across the board. Keep an eye on the macroeconomic environment to understand how it might influence the stock you're researching. Look at how the company's competitors are performing. Are they outperforming the company, or are they struggling? This can give you insight into whether the company you're researching is a leader in its industry or playing catch-up. For long-term investors, it's also important to consider whether the company offers dividends and has long-term growth potential. Some companies reward their shareholders with dividends, regular cash payments based on the company's profits. If you're looking for steady income from your investments, dividend-paying stocks can be a good choice. Check the company's dividend history to see if it has a track record of paying and increasing dividends over time. Think about where the company will be in 5 or 10 years. Does it have room to grow? Is it investing in research and development? Does it have a plan for adapting to changes in its industry? These are all signs that the company could deliver solid long-term returns. Now that you know what to look for, let's talk about the tools and resources you can use to conduct your research. Publicly traded companies are required to publish quarterly and annual reports. These documents, known as 10Q and 10K filings, provide detailed insights into the company's financial health. You can find them on the company's investor relations page or the SEC's website. There are plenty of online tools to help you filter stocks based on criteria like PE ratio, dividend yield, and earnings growth. Some popular platforms include Yahoo Finance, Google Finance, and Morningstar. These tools save time and make it easier to compare multiple stocks at once. Many brokerage firms offer analyst reports that include expert opinions and ratings on stocks. While you shouldn't base your decisions solely on these reports, they can provide valuable insights and highlight factors you might not have considered. And that's a wrap on how to research stocks. By understanding the company, its financials, the industry trends, and the tools available to you, you can make smarter, more informed investment decisions. Remember, investing isn't just about picking the hottest stock. It's about doing your homework, understanding the risks, and making decisions based on solid research. If you found this video helpful, be sure to like, subscribe, and share it with others. Thanks for watching, and happy investing.